Man, you must be flipping my flapjacks. No. That's like the 10th take. And no matter how many times I say that, it just doesn't sound right. Okay. I hope it didn't sound as bad as I felt because, yo, I tried to do it. I've tried. I'm not doing it again. This is it. This final take. Now, if you're wondering, what the heck is Emmanuel talking about? Guys, if you've not heard, your boy got featured on Jeremy Financial Education's channel. Crazy. Jeremy, you're an absolute goat for this. You goated in my books, man. I've been following you for so many years. I've been listening to your videos. I watch all three of your channels. Well, when you show love to Financial Education 2, I watch that. But right now, Financial Education 2 is getting neglected. But guys, Jeremy reacted to one of my Tattoo Chef videos on yesterday. He uploaded it on his channel, Financial Education 3. And you know what? Like, I have to give Jeremy a ton of respect, okay? When I discovered that he's going to review my video, I thought he's going to absolutely tear it to pieces. I was thinking to myself, oh, damn, you know, the OG. Because, yo, this guy's been about this guy is a multi-millionaire in the markets, you know? For him to acknowledge my video and to review it, I thought, yep, here we go. He's going to tear it up. But you know what? The guy was so cool, man. He acknowledged a number of my points and said that they were fair. And, you know, he was just a really cool dude. And for him to actually have my face on his channel, shouting your boy out like that, you know what? Huge respect to Jeremy. You didn't have to do that, my brother, but I really do appreciate it. And as a result, we did gain a lot of new subscribers. So all of the new subscribers that came over here from Jeremy's channel, thank you so much for checking out my channel. And I hope with the information that I share on this channel, we can grow our wealth together, because that's what my channel is all about, generational wealth builders, okay? And that's also the name of my Discord. So Jeremy, if you're watching, thank you so much, Sensei. And to the new subscribers, welcome. Now, with that said, in this video, I want to share with you what I believe to be one of the most undervalued and also probably the most manipulated stock on Wall Street, okay? Now, the type of manipulation that I'm referring to is not my own words. This is from the book 100 to 1 in the Stock Market by Thomas W. Phelps, okay? And the chapter is called Stock Market Manipulation, and it was written in 1971. So we're going back over 50 years ago. But I believe the tactics that are being played by the hedgies, the institutions, are still being played right now. And you'll see it in this stock that we talk about. And it's effective today, just as it was back then. Okay, so look at this. The stock market is almost unique in that the way to attract buyers is to mark up the price of the merchandise you want to sell. Conversely, if a large operator or institution or hedge fund wanted to accumulate a position in a stock with great long-term potential, which is a company we're going to speak about today, the least effective thing he could do would be to bid up for it, okay? Essentially buy up the stock, you know, in huge chunks, and the stock skyrockets. Like, they don't want to do that, okay? Instead, on the contrary, if he could supply the stock on each embryonic advance, so buy small chunks here, small chunks there, so that after a year or two, speculators agreed that it was acting badly. So the company is doing well, right? The company has great long-term potential, but the stock has been going nowhere, right? So then speculators agreed that the stock was acting badly. They would sell to him, so the institutions, the large operators, all they had at successively lower prices, okay? This was written 50 years ago. The stock that I'm referring to in this video is HIMS, okay? Ticker symbol is HIMS. And let's just zoom out for a bit, okay? This stock has pretty much flatlined. Now, it used to be a SPAC, but it's now worth less than the SPAC price. So back then, we knew the floor for SPACs was about $9.50. Most of them hovered around $10. But HIMS right now is trading at $7.40, essentially worth less than it was as a SPAC. But the company has been firing on all cylinders, and this has been frustrating a ton of HIMS shareholders. And let me show you what I mean. So I received this comment on one of my videos on HIMS. He said I should have sold HIMS when it got to $9. That stock is not going anywhere. Even if they report good earnings, it's only going down, okay? So again, embryonic advances. So speculators agree that the stock is not going anywhere, or the stock is bad, and then sell to these institutions at cheaper price. It's working a treat. Then let me show you what institutions have been doing with HIMS right now. Institutions have been loading the boats, okay? Look at the recent institutional transactions. As of Q3, As of the most recent quarter, so that's Q3, Vanguard, they increased their position by 21%. They're now sitting on over 10 million shares of HIMS, okay? Franklin Resources, I don't know who the heck they are, so screw you guys. But BlackRock is another popular name. And guess what they've done in the most recent quarter? They increased their position by 63%. And they're now sitting on over 2 million shares of HIMS. Another big institutional name that took advantage of the weak share price, Goldman Sachs. Goldman Sachs increased their position by 919%. And then you had this other institution here, Jump. They increased their position by 977%. And then Bank of New York Mellon Corp increased their position by over 100%. And Credit Suisse by 26%. So while you have the company firing on all cylinders, killing it on the top and bottom line, the fundamentals and the financials are just constantly getting better. Management are smashing it. The stock is going the opposite way, and retail investors are getting fed up, selling out at a loss, cutting their losses, whilst institutions are slowly loading the boats with each embryonic advance. Don't get played, okay? Now, what do I mean by him smashing it? We recently reported our Q3 earnings. The EPS was in line with analyst expectations, but we beat on revenue, okay? So as you can see here, Hims and Hers, the Q3 GAAP EPS was minus 8 cents. The revenue was $74.17 million. That was up 79% year over year, which was a beat of $3.6 million. So this was a great press release. You would think the stock would go up, right? Nope. The stock went down, and the stock went down heavy. Okay, so this was when we reported earnings. We had this huge jump up. It gapped up, but not only did the gap close, it tanked. Okay, it tanked even more. So from the highs of the wick to the low point of the wick, it was down minus 12.6% on the day when they were in line with expectations for EPS and beat on top line. Okay, down 12%. You would think the company missed. They beat. But let's not just stop there. Let's dive a little bit deeper into their 10Q. Okay, so Hims, if you're not familiar, has two main sources of revenue. They generate revenue from online and also from wholesale, okay? And look at the wholesale revenue. It was up 86%. So from the previous year quarter, they generated $38 million. But in this recent quarter, $72 million. Insane. The only real weakness came in wholesale revenue, and this is something that Andrew, who's the CEO, Andrew Dudum, he's made it very clear that his main focus will be on online revenue. Because if you look at why the online revenue grew so strongly, growth in online revenue for 3 months and 9 months ended September 30, 2021 was driven by growth in what? Subscriptions. So online revenue is generating that recurring revenue for the business. Brilliant. Also, AOV, which is average order value, was up, and net orders, okay, and the acquisition of Apostrophe and Honest Health. So this was two of our recent acquisitions in Q2. Now, take a look at this. Total revenue, of course, was up 79% as a result of our strong online revenue. But not only that, net orders were up, okay? So net orders jumped from 582 to 968. And if you look at our average order value, that was also up. So one of the things that Hims have done recently, they started to do bundle packages, and as a result, they can charge higher. So the average order value jumped from $67 per average order value to $74 AOV. And this is the most beautiful part of the income statement, which was their subscription growth. Look at that. Subscription pretty much near enough doubled, okay? In the prior year period, we had 283,000 subscribers. So this is in thousands. But this quarter, we reported 551,000 subscribers. And that's all thanks to marketing efforts with Miley Cyrus and also marketing efforts with the NFL player. What's his name? We don't have NFL in the UK, so I don't really follow it much. Gronkowski. So if you're not familiar with that, you can watch some of my previous Hims videos. I'm not going to go over it again. But essentially, Hims has partnered with Miley Cyrus and Gronkowski. They are ambassadors for the company, and they're also going to receive some SBC, some stock-based compensation. But it's working. It's absolutely working because we've been able to maintain our strong gross margins of 78%. And everything about the company is firing on all cylinders. Now, that's the income statement, okay? Income statement is very strong. What about the balance sheet, I hear you ask? HIMS's balance sheet is also very strong. If you look at the cash and cash equivalents, we're up. It pretty much almost doubled. If you look at the current assets as well pretty much doubled. So we're sitting on 274 million versus our total current liabilities, which is only 52. And what that essentially means, you want your total current assets to exceed your total current liabilities, because that essentially means that we have enough in the value of our assets to cover ourselves for the next 12 months, essentially. So the chances of him going bankrupt within the next 12 months is pretty much next to zero, according to our recent quarter. And also our stockholder equity has been going up. So that's a sign that our assets are growing much faster than our liabilities. Now, the only real negative is that we are not positive free cash flow, but that's to be expected. Don't forget, we're a hyper growth company. So a lot of money is being spent on marketing. A lot of money is being spent on research and development, R&D. And as a result, our top line is growing exponentially, and the management are being aggressive in that sense. Now, I've been speaking about hims and hers for quite a number of months now on my channel, and one of the most popular questions I've received is inflation. How will inflation impact on hims going forward? And pretty much, if you go to the earnings call, it wasn't really referenced or even a concern given in the earnings call. In fact, going into the next quarter, we actually raised our guidance. So this was part of the transcript. He says, now moving on to financial guidance for Q4 2021, we are raising our revenue guidance to a range of $76 million to $78 million. This includes approximately $2 million from our new wholesale agreement with Walgreens. So if you're not familiar, HIMS recently secured a contract with Walgreens, and that's going to bolster up the wholesale side of the revenue part, okay, by pretty much $2 million going forward into Q4. So already we're going to see an improvement in the wholesale revenue side. But even if you exclude that, okay, the company said that we are guiding to a Q4 revenue range that is roughly in line with Q3 revenue. Okay, so if we see more subscriber growth, if we see more orders online, and maybe if we maintain our average order value, plus the additional $2 million that we're going to receive with this partnership with Walgreens, we're going to crush Q4. We're going to crush Q4, and I can see why inflation wasn't really a concern of Andrew in the earnings call. Now, as a result of this strong quarter, the company received an upgrade from Piper Sandler, and they've upgraded hims and hers to overweight, as it's dominating the market for direct consumer market for sexual health, dermatology, and hair loss. Okay, and the firm has a price target of $12, which represents a 50% upside, but it's now more than 50% because the stock has dropped even since its upgrade. So the company are firing on all cylinders, but as you can see, the stock has absolutely tanked. And that represents a great opportunity for us to strengthen our positions, in my opinion. And that's what I've been doing. That's what I've been doing all week. I've been nibbling on HIMS. My average is about $8.80. I'm still bringing my average down. I mean, this is the time, guys, in my opinion. This is the time. If you haven't heard about HIMS before, definitely put it on your watch list. I'm not saying this is a recommendation to buy. Remember, I'm not a financial advisor. I'm just letting you guys know what I'm doing. And I can see institutions, as you saw, institutions are loading the boats. I am loading the boat. It's only a matter of time. Take advantage of this manipulation going on with the stock by essentially adding it to your watch list and doing your due diligence. So that's all I wanted to share with you in today's video. Please, if you gain any value, make sure you smash the like button. If you want to know what I'm buying and selling in real time and you want access to my research notes, you need to join my Discord group, and you can do so by clicking the Patreon link in the description below. Thank you so much for your time. I really appreciate you guys, and I'll see you in the next one. Peace.